Hello, the insurance agency Marco Figueiredo made this video to introduce smoothly the Luxembourgish taxation to anybody. This will allow you to better understand other following videos where the goal will be to optimize your tax return and pay less taxes. Now you should be thinking in how amazing to speak about taxes will be. This will be great! We will explain roughly how the Luxembourgish tax office calculates the taxes that you pay or should have paid on your incomes. We will start by drawing a container, a bit like a glass of water, into which all of your annual income will fit. So everything you earn in the year will go into this container. Note that income can be salary income, it can be pension income, income from the exercise of a liberal profession, commercial profit, agricultural and forestry profit, income from a rental, etc. So when we talk about income, we mean all the income you receive. Once the income is in this container, opposite we have what is called the tax scale. I take this opportunity to explain what is taxable income. It is the gross income less social security contributions when we talk about salary income. This is where I'm going to caricature to simplify and turn this understandable. I am going to make a fiction of what's going on in the tax scale, but it's not very far away from reality. From 0 to 10,000 euros of income, the taxpayer does not pay any taxes. 0% is 0 euro. From 10,000 euros to 20,000 euros of annual taxable income, on this income bracket we pay 10%. So 10% of 10,000 euros makes 1,000 euros in taxes. From 20,000 to 30,000 euros of annual taxable income, on this income bracket people pay 20% taxes. 20% of 10,000 euros are 2,000 euros. From 30,000 to 40,000 euros of annual taxable income, on this income bracket we pay 30% taxes. 30% of 10,000 euros are 3,000 euros. And anything above 40,000 euros of taxable income till 50,000 euros is taxed at 39%. 39% of 10,000 euros are 3,900 euros. Between 40,000 euros and 100,000 euros, it is taxed at 39%, whatever the amount. There is an additional tax bracket from 100,000, which is 40%. From 150,000 till 200,000, you are taxed 41%, and anything over 200,000 is taxed 42%. And that stops there. This is the last tax bracket. For all those who have dropped out and who have so far only heard it's better for your health to call us at 27 76 80 80, and our specialists will be happy to explain it to you in person and to mention your case. For all the brave who wish to continue, fasten your belt. Here is the following. We will take the example of a person who earns 50,000 euros in annual taxable income. He paid 1,000 plus 2,000 plus 3,000 plus 3,900. So this person paid 9,900 in taxes. Added to this is the employment fund, up to 700 euros in this case, which gives us 10,600 euros. In the description, you will find the link with the details on what is the background of the employment fund and how it is calculated. Then we will introduce the concept of global rate. The global rate is an average rate between what the person earned as taxable income and the taxes he paid. So a person who earned 50,000 euros and paid 10,600 euros in taxes, it has an overall global rate of around 20%. We also introduce the notion of marginal rate, which I will explain you. The marginal rate is the rate that was applied to the top of your incomes. We saw that it was taxed at 39%, but by adding the fund of employment, this brings the marginal rate to 41.7%. So here in this scenario, this person has a marginal rate of 41.7%. All additional income will be taxed at this rate. Basically, it means that if tomorrow this person had an increase of income, for example, a salary increase, this increase of, for example, 100 euros, the increase would suffer social contributions of about 12%, which makes 88, and she would then undergo taxation at the marginal rate of 41.7%. So out of the 100 euros, the taxpayer has roughly 50 left. It goes in that direction if there is an increase of income, but it can also go the other way when we have so-called special expenses. When you have a special expense, you can deduct it and therefore reduce the contribution base. We can deduct a pension plan, a housing saving plan, and life insurance that you will see in the following videos. Basically, if you subscribe to a pension plan, you can save a maximum of 3,200 euros per taxpayer, and the tax office will reimburse you the marginal tax rate on the money you have invested. That means 41.7% of 3,000 euros, you will gain 1,334 euros. You are still there? Congratulations on standing until the end, or you may have fallen asleep. Anyway, you deserved this painkiller for your headache. Thank you for watching. Please do not forget to like us on Facebook and see you on our next videos.